Hi, traders. I wanted to come to you once again, just very briefly. I wanted to talk about something that's been on my mind for a couple of days, and I certainly wanted to convey to you. This message is probably not going to apply to everybody, but to those that it does, please take heed. Um, Subject today is trust your analysis. The subtitle is What's in Your Toolbox, or What's in Your Tool Belt. What I mean by that is that sometimes we find ourselves getting in our own way by means of a number of indicators. We're looking for confirmations from 2, 3, 4, and 5 sources sometimes. And unfortunately, when you become indicator dependent, you lose sight of the most important indicator that there is, and that is price. Now, of course, I know that's a process. It takes you a while to get there. So you can, if you will, look at those indicators as training wheels. And as you get better, it would probably be in your best interest to minimize your number of indicators. I'm not absolutely saying you have to go naked. Um, if that's not your ultimate goal to do so. But it is important for you to have just a minimum number of indicators to either confirm what you're seeing in price, um, to confirm what you see, not so much to be led by, because we all know that indicators have this lagging effect. So typically, if you're waiting for a confirmation from a particular indicator, now I'm not going to get into the names of the types, you know, the ones that you use. But typically, by the time you get the indication, the move has already transpired. So your optimum entry has left the station without you. So, for example, there are just a handful of tools that I use primarily. Um, as you see on the screen, actually, now I think about it, this is a perfect screenshot. Um, I typically will use a single moving average. Sometimes I don't use it, but you will see some screenshots where I do still have a single moving average. Another tool that's in my tool belt is the Andrews pitchfork. Um, I use it because, one, it allows me to quickly place a channel. And then, of course, it is built on the Fibonacci ratio. So, of course, it has its built-in fib. So it becomes very useful. And of course, for obvious reasons, if it's in the upper or lower channel, depending on its direction, it can indicate a number of things. Like, for example, the way I have it placed on the screenshot, I was capturing a swing, a swing low to be exact, and then all of the price action that followed it. So it gives me a really good idea to look at how I want to utilize this. So primarily, if price is within the solid lines, I can trade from one line to the next with confidence. And even if it extends outside of the solid lines and it erodes to the dash lines, it's based on Fibonacci, so I could certainly utilize those as well. So most importantly, excuse me, I understand how to use it. You also see on the screen the TDI. This is my modified version of it. These settings are my own personal that suit me. So please don't be alarmed if your TDI doesn't look like mine. And of course, you know that the TDI is comprised of a moving average, or actually a couple. Um, I have a moving average that acts as my market baseline. I have, which is the white line. The greenish, yellow greenish line is represents the RSI, and the red moving average represents the signal line. And then, of course, I have Bollinger Bands. Excuse me. And so, of course, if you've seen any of the Dean Malone, who is the creator of the TDI, he created the um, Trader's Dynamic Index Indicator. Of course, it's not available for the phone, but you certainly can create a mock-up of one, which is what you see. I'm not going to get into all of that and how it's used and how I use it, but the point is that I use just a few tools, and typically um, they either tell me or they confirm, excuse me, they confirm what I see in price action. I don't let them lead me. I look at price action and I make a determination as to what my bias may be. And so, of course, these tools are just that. They are an aid. Um, I do use other methodologies and concepts from other strategies to combine into my own sort of unique strategy. But in terms of tools and indicators, most times you'll just see a TDI and a moving average. Now, of course, I'm not telling you to do what I do. I'm just saying I trust my own analysis. And the tools that I have in my tool belt, which are few, but the few that I have are very powerful. Now, of course, I talked about the Andrews pitchfork with Fibonacci features. I do use a modified Fibonacci retracement and extension tool. So I do trust my analysis. I think it is important as a trader. It is important for you to trust your analysis. So when you form a bias, um, it's okay if you happen to be wrong. Have a contingency in the event that you are. So it's really more so important to look at the probabilities as opposed to saying, I think the market's going to go long or short. I think it's probably more important to say, well, the greater of the two probabilities, and although there are three, the market's going to go up, down, or sideways. But in the greater of the three, which normally you can't really uh, predict consolidation, so we'll just narrow it to two. If your bias suggests that the market's going to go short and it doesn't, what is your contingency if it goes in the other direction? Now, of course, you got to think about risk management. So, of course, when you're placing your stop loss, are you going to be comfortable with that in the event that the market turns on you? And then, if so, how are you going to go through the process of assessing what to do next? But that's another topic for a different day. I won't really get into that because I don't really want this video to be that long. Um, the real essence of me doing this video is to emphasize trust your analysis. And if you trust your analysis, you can set your entry, stop loss, and take profits based on your analysis. Then step away. Step away. It doesn't require you to babysit it. If your analysis and your take profits and your stop loss are adequate enough to let the market do what it do in the direction of your bias, you'll be fine. But babysitting your trade will only make it worse. I can only promise you that. That is from early experience. Don't babysit your trades, because what happens in the market sometimes will frighten you. Frighten is such a strong word, but I think you get the point. So honestly, again, as I say this in closing, I do sort of feel like I rambled a little bit as opposed to what my original thoughts of when I wanted to do this video is to really trust your analysis. Don't overload yourself with a bunch of tools and indicators. You only need just a couple. Mine, Andrew's Pitchfork, Fibonacci Retracement Tool and Extension, TDI, Single Moving Average. But my most important indicator is price. Okay? So, with that said, I truly, truly hope that something I said today, even with what I felt like I rambled, but I hope that you feel like there was some value, something that you could help, something in this video that can help you overcome these obstacles of you getting in your own way and defeat that analysis paralysis that sometimes captivates us and prevents us from getting into the trades that we would later say, oh yeah, I saw that, but I didn't get in because I was waiting on the stochastics to tell me something, or the RSI to do this, to get into overbought or oversold conditions, or et cetera, et cetera. Now, so anyway, I certainly do wish you good hunting in the upcoming week. I want to see you do well, whether I know you or not, because apparently you chose trading for whatever reason. Uh, Again, I've spoken about that in other videos, talking about freedom, whatever version that is. Freedom from your job. Freedom of more time accessible to you. So you don't have to go punch a clock or report into someone's plantation. The economic freedom to do and have the things that you so desired, to provide your family with a lifestyle that you've only dreamed about. But anyway, again, trust your analysis. Uh, I've spoken for about 13 minutes now, so I'm going to wrap this up. Again, I hope you find value in this. I hope that you get some of your technical analysis out of the way before the trading week begins, whether you trade on a Sunday, Monday, or waiting till Tuesday. Getting your analysis and updating your charts as soon as possible is just as crucial. But again, trust your analysis, avoid analysis paralysis, don't use too many indicators. Okay? I want to see you do well, and I'll see you in the next video. You have a great day.